Hey there, Scott Hartis with Hartis Realty Experts at Keller Williams, and I'm here with Stephen Lane of MetLife. Just want to do a quick sound test because we had a little bit of technical difficulty this morning, which is why we're late. If you are watching this, if you could hit the like or the love button for us, that'd be great. I'm just going to check on it. Play our little intro here. All right, so we're back. Again, I've got Stephen Lane here from MetLife, and I'm going to have him just introduce himself and tell a little bit about his experience as an insurance agent and what services he offers.
Hi, everybody. Again, as you said, my name is Stephen Lane. I'm an agent with MetLife Auto and Home. So, of course, homeowners insurance, renters insurance, home, your life insurance, all those needs I have things to take care of. I've been in the insurance industry for about 5 years. And one of the great things about my industry is I get to work with several different carriers, so I can find something for the customer exactly what they're looking for at a fair and competitive price.
Okay, great. So I invited Stephen on today just because I really wanted to talk about homeowners insurance, and also later on in the show we're going to talk about ways that you can get less expensive homeowners insurance through discounts. He's going to give us some good ideas and tips on that. And we're also going to talk a little bit about flood insurance because he told me something that I didn't realize today. So first question I wanted to ask you, Stephen, is how exactly does homeowners insurance work when you're buying a home? Is it required? How much do you have to pay? Is it like where you pay a full year up front or a couple months? Can you talk a little bit about that?
Absolutely. Homeowners insurance traditionally is going to be required if you're financing a home. They're going to require that you have it for the value of the home or the loan price of what you're purchasing the house for. If you're buying a house paying cash for it, technically they might not require it, but I don't think that that's necessarily a good idea. If you invest $300,000 in a piece of property, you want to make sure that it's covered if something were to happen. Normally, homeowners insurance, if you're doing it through your escrow, if you're on a mortgage, it's going to be paid yearly automatically. If you own the house outright, you can switch it to monthly or do quarterly, things like that for you. But normally it's going to be paid up front at the beginning of the year.
So you pay a full year in advance.
Yes.
And then escrow basically means that that they'll pay it per month for you on your behalf.
They pay the year up front in full.
The homeowner does.
Yes. The bank actually, or the lender, pays it for the year, and you pay it into your escrow payment. Normally, if you have an escrow, the escrow is going to cover possibly HOA fees, your homeowner's insurance, and your property tax.
Okay.
And the lender will take care of those for you when those bills arrive.
Got it. I thought of a question kind of based on things that you're talking about. So if someone did have cash and they paid for a place, let's say it was a rental property on a townhome, and they're like, yeah, I may risk it. I don't want homeowner's insurance because if this were to burn down, the HOA master policy will cover it. Does it cover all of that?
No,
okay,
absolutely not. An HOA master policy, it specifically says in that master's policy what's going to be covered. So it may be just the studs, the roof, things like that. You're going to be responsible for the inside of the house, the contents, cabinets, all the belongings, the floor, the carpet, the walls, things like that. That owner of that property is still going to be responsible for. So if they just rebuilt to the walls, you're simply going to have a bare house. Nothing else is going to be put into it after the HOA's policy takes care of it.
Got it. Okay. I had that come up. That's why I was asking. And my client did not have insurance. I was kind of like, that's kind of surprising because I don't want to even get into it, but I was just kind of surprised. So if you are getting homeowners insurance, is it different if you're buying a condo as opposed to a house?
Absolutely. If you're buying a house, obviously you're going to be responsible for the whole house itself. So the walls, the brick, the roof, everything that's really included in that house, the owner is going to be responsible for. And if you're, again, on a mortgage, they're going to want to make sure that that's properly protected. If you're buying a townhome or a condo or something like that, again, that group is going to have what's called a master policy that specifically says, okay, you're in our condo development. We cover the outside walls. We cover the amenities, things like that. But everything inside of your condo is your responsibility. So the walls, the upgraded fixtures, the cabinets, personal belongings, that's all going to fall on the owner of that property.
Okay, that's good to know. So kind of switching gears, can someone get a discount if they have both homeowners insurance and car insurance with the same insurance carrier?
Yeah, there's a lot of companies that will offer multi-policy discounts. So if you bundle your auto and home together, you can get substantial savings. I just had a customer that I wrote 2 days ago. The standalone policy for his house by itself was $1,200, a little over that. With the auto and home discount, it dropped it to about $850. His auto was only about $400 a year, so he was able to get auto and home combined for the price of the home by itself. So it was really a no-brainer in that instance. And definitely want to recommend that, and always make sure that you're getting those discounts for multi-policy if it's available.
Okay. With the recent hurricanes and flooding, obviously we've had a lot going on in the past couple weeks. What should people do about flood insurance, and is it always required?
Flood insurance is not always required. If somebody is purchasing a house in a flood zone, when the lender pulls reports and they do all their due diligence to find everything out, they're going to see that home is in a flood zone, and they're going to require the owner to get flood insurance. If you own your house outright, it's your responsibility. If you want it, yes. If you want to take the risk and not have it. That said, if you don't live in a flood zone, also you can get it, but it's significantly cheaper because that area is going to be less likely to be flooded if something were to happen.
Okay.
So that's really where it comes in. If, like on me, I live in an elevated area, and it's extremely unlikely for me to get flooded in my house. A year policy for me for flood insurance is about $425 for $200,000 worth of dwelling coverage and $80,000 worth of personal property. So there's a lot of good options we can look at and show people with it. One thing that I have been experiencing a lot lately that I want people to be aware of, flood insurance has a 30-day waiting period. If you get flood insurance today and pay for it today, it does not kick in for 30 days. I've had a lot of people calling and asking about it with the hurricanes coming up, and if they were to get it, it would not protect them on this upcoming storm, but it would 30 days from now. And that's just something a lot of people don't realize, something they need to be educated about.
Yeah, I mean, I guess a lot of insurance has waiting periods like that, but it didn't even occur to me until you told me that this morning that there was a 30-day waiting period. Okay. Are there other things that a buyer should do to get discounts on insurance? So, for example, get a alarm system, or is there anything like that you can give our viewers tips on for how to create a lower policy, but also, I guess get more added value, basically?
Yeah, absolutely. There's a lot of different things you can do, or things that can be discounted in a policy. Brick veneer, brick homes are going to be less expensive to insure because of it's less likely that a fire is going to result in a total loss. Vinyl home with just wood frame, more likely to burn. So it'll be a little more expensive.
So with that, you would say if someone can afford it in their price range, it would be better to get
brick home. Brick would be better. Again, if it's the aesthetic you're looking for, go that way. Other things alarm systems are huge. Alarm systems can, some insurance companies, anywhere from a 25 to 40% discount.
With respect to that, sorry to interrupt you, but does it have to be monitored?
I
know there's a lot of
We have two policy discounts. We have one for just an alarm system, more of a deterrent. Then we have one which is a reporting alarm, which would go to the reporting company, report it to the police department if something were to happen, and they get a larger discount on that. Other things that are going to be a really big discount for people, if you're in a condo or a townhome, if it has sprinklers running. Mm-hmm. If it has a partial or a full sprinkler system, that's a very substantial discount that'll be applied, because in the event of a fire, the sprinklers will kick in and help take care of that loss, keep it from being as high as it needs to be. The other thing that adds a big discount for townhomes, condos, homes, controlled access. If it's a gated community or if you have to have a key card to get into the condo, those are going to give additional discounts because it prevents things like theft and helps lower the chance of loss. So that'll give a significant discount as well.
Okay. Those are all good tips. Okay. Switching gears again. So with personal property, I know you were talking about with flood insurance, you've got, $200,000 on your actual house, but then $80,000 on the actual contents of the house.
Yeah.
With those contents, you would hope that if there was some sort of fire or flood, it's all covered. But I know that I've heard instances where it's not all covered because someone couldn't prove that they own something. So can you explain a little bit about the best way to cover your butt on that?
There's lots of ways you can cover yourself. I know people who keep a log, keep it in a book. If you have a safe deposit box at the bank or something like that, you keep the log in there. I know a lot of people who go around their house and take pictures of everything. If you have a lot of electronic devices, guitars, musical equipment, things like that, take a picture of it. Take a picture of the serial number. Just do that with all your items. Take an hour, go through the house, do that. You can keep it on memory card, put it in the safe deposit box or in a fire safe, or upload it to the internet. If you have Google Docs or Box, Dropbox, something like that, drop that file into the internet. If something does happen, even if you've lost that memory card that everything was saved to, it's still going to be saved on the internet so that you can say, these are all the items I know.
Got it. So it's best maybe to do, let's say it's electronics, you would do what the name of the item was, the model number, and then serial number.
Yeah, absolutely. And again, if you're just taking pictures, here's a picture of my Xbox, here's a picture of the back of it showing the serial number. So that they can say, yes, he did own this item.
Okay. Those are all great tips. So that actually covers the 6 questions that were kind of the most common homeowners insurance questions. Do you have anything else that you want to share or talk about before we let the audience go?
Big things, a lot of people ask me a lot lately is about the way the rates and stuff in North Carolina work. I get people who call me and want an idea on an insurance quote, but they haven't necessarily picked out a house yet. They're looking in this area or they're looking in this area. We can give a rough idea, but the way zoning works in our areas is it could cross the street and it could be in a different fire department's zone, and that can change the rate. So we can always look and give somebody a good idea of what they're looking for, but it always helps to know exactly the house they're looking for. Some other things that protect people as far as value, some things I didn't mention, if the roof has been done recently, if the electrical has been done recently, if it has updated plumbing, if it has an updated HVAC system. Things like that are going to help you as far as your rate on your homeowner's insurance because they're newer items, less likely to fail, and it'll help bring your rates down some more. There are things that insurance won't cover. If you have knob and tube wiring, which is very old wiring in the old fuse boxes where you actually had to twist in fuses, a lot of places won't cover that anymore. They want you to switch it to a circuit breaker system. So they will not cover that until those things are done. So if you're in the middle of buying a house, I would definitely check and make sure what kind of wiring it is, when it was updated, if it's an older home, plumbing, what kind of plumbing it is, if it's old copper piping, things like that, that could be a problem as well. HVAC, if it's an older HVAC, it could fail at any time and cause problems. But that said as well, if it's a 15, 20-year-old system, it's probably running very expensive, and it could save you some money just getting a new one because it's going to be more energy efficient. But again, if anybody has any questions on stuff like that, I'd be happy to talk to them, answer questions just more as a resource and see what we can do to help them out.
Okay. As you were talking, I thought of one other question I wanted to ask you that a lot of people don't probably know about, maybe even some agents. Can you explain what a clue report is?
Clue report. All right, claims and loss history. What a clue report is. Let's say you have had your house and had a claim, roof, hail damage, things like that. The claim loss report shows what things have taken place for you in your history of how the times go. So with homes, a lot of times it's 5 years is how long the claim will stay with you.
Okay.
So If you buy a house and 5 years ago it had a loss, well, that doesn't count against you because you're buying that house.
Right.
But if you had a loss at your previous house, it follows you because it's your claim history. Most places will not insure somebody if they've had more than 2 major claims in a 5-year period.
What's considered major? Is it like a certain dollar threshold?
Liability, if you have somebody get hurt on your property, is huge. If you have a water loss, so a busted pipe, something like that can be lost. A theft in your house is considered a major loss. A lot of places are more forgiving on what we call acts of God.
Got it.
Hurricanes, hailstorms, things like that. But if there's an excessive number, that still looks bad.
Got it.
One thing that I always tell my customers is to call me first if they have any questions about a possibility of a claim, because the second they pick up the phone number and call that claims department, it counts as a claim. Even if you're just asking a question, they're starting a claim because they're under the opinion nobody's going to call and ask just a random question about a claim and call the 1-800 number. So we can always look at something and say, in auto, just an example, somebody cracks their windshield. They have a $500 auto deductible to get the windshield replaced. I have a contact, with one of my glass repairs. They can replace it for $250. It's cheaper and it doesn't count as a claim against them. Because again, even if they don't have the work done, it shows as a claim on the loss history report.
Got it.
And we don't want that to happen to people.
Okay. Thanks for that extra question that
Awesome.
I thought people
No
might
problem.
want to know about. So what's the best way for people to get in touch with you? Is it email, phone, Facebook?
Email or phone. My email is sclane@metlife.com.
Okay.
My office phone number is 980-785-4MET, so 785-4638. Or you can find me on Facebook. My business page is Stephen C. Lane, MetLife Auto and Home. Easy to find me on there. People can message me, whatever's convenient. I'll be happy to answer any questions for anybody.
Okay, great. Well, thanks for joining us today.
No, thank you.
One quick plug for next week's show. I'm going to start doing this on a regular basis. I've been trying to do it every week, but I'm going to keep it now on Wednesdays at 11:30 a.m. And this coming Wednesday, I'm going to talk about the top 11 reasons homes don't sell and what to do to avoid making those mistakes. So as we go into the fall, the market slows down a little bit in terms of the amount of buyers looking for homes. So usually you're going to have less buyers, so it's just going to make days in the market go up. You're going to need to be a little more aggressive with how you market your house and the things you do to make sure it gets sold. So this is definitely a good topic if you're thinking about selling, in the next quarter or probably next 5 or 6 months. So join us next Wednesday at 11:30. See you later.
Bye, guys.